You are listening to ChartingWealth.com's weekly review and forecast for the week beginning Monday, the 31st of October, 2016. Our most anticipated podcast of the week is always this weekly review and forecast. We're going to go through our three market indexes and gold. We're going to talk about what the weekly trend is. Then we're going to go through each day, and we're going to talk about the week in review, what moved the market in the last week and what may be moving it in the coming week, particularly important meetings of the Fed, the European Central Bank's release of data, those types of things. First, let's go ahead and jump right into IYY. What is that? That's the iShares Dow Jones U.S. Total Market Index Fund. It's an exchange-traded fund that tracks the entire market. It was down again. On Friday, we look at our weekly chart. We are still in a downtrend. We do have an up candle for the week ending the 28th of October. It is actually a spinning green top. It's got a long wick on the bottom, a wick that's about half that size on the top, and a solid green candle. It is still continuing beneath the weekly trend line. Our PPO, our price percent oscillator, which is like the MACD that we've used in the past, the moving average convergence divergence indicator, except it uses percentages instead of price itself, which makes it actually more helpful. And we appreciate JH, who wrote to us recently recommending we started using this. We checked it out and we actually like it better and have adopted it. If you don't have our new charting layout, you can of course get it by subscribing to our daily podcasts at chartingwealth.com. We'll send you a link so that you can get it from freestockcharts.com. It is our new proprietary layout that we will be happy to send to you for free. So what does this spinning top, it's actually more than that, but it is a green up candle, long wick on the bottom, shorter wick on top. What does it mean? Well, what really we pay attention to, the candlestick tells us a little something, some indecision there, but what we really see is our weekly trend in the total market moved over going down for the week ending the 16th of September. It drug sideways for a little while, for 2 weeks, and then dropped off starting the week of October the 7th up until this past week. And I mean the week ending October the 7th, up until this past week ending the 28th of October. We have seen the PPO distance itself from the signal line, which means that the down momentum is getting greater. We've also seen our derivative oscillator continue to move south, that is to move down, since the week ending the 16th of September. So we've continued to see that down movement accelerate. So even though we have a green up Heikin Ashi candlestick, those of you who have not taken our Heikin Ashi candlestick trading course yet, you need to do that. You can get it for free at either the chartingwealth.com channel or website or the Charting Wealth channel on YouTube. We have that training. We've gotten lots of compliments on it. Heikin Ashi is the only kind of candlestick we use. It means average pace in Japanese. It's everything you need to understand how price movement works. We really like those. But what we see is a continued down march in the market sentiment and in price sentiment. Now, again, market down 0.29%. If we look at how the market shaped up by going to the daily charts throughout the course of the week, of course, the week began on the 24th of October. Excuse me, we saw the market up that day. Then we had a doji the following day. That's the 25th. That was Tuesday, which of course tells us lots of indecision. The market was actually changing from that up move, down the following day on Wednesday, up a little on Thursday, and then bigger down movement on Friday with a crossover going down on that daily chart. Again, all things being equal, we say this over and over, and it's so important for you to pay attention to. Those of you who are using our daily market worksheet, if you're not and you want to supercharge learning how to read these charts and to become a market master, what do you have to do? Fill out that daily market worksheet every day. Go ahead and mark for the coming week that we're in a confirmed down move on the weekly chart. All things being equal, the market always moves in the direction of the prevailing biggest chart. All things being equal, That's the way the market moves, and we're in a down move on the total market. The 2-day chart's also currently in a down move. After we finish this broadcast, of course, we'll be recording the daily broadcast for Monday. So that's where we are. The derivative oscillator on the daily chart also flipped over on Friday as the PPO crossed through the signal line going down. So that is where we are as far as the total market goes. Now let's go to a smaller subset, which is the S&P 500. Those are the 500 big companies that have so much of the volume of the market, but it is a different chart. It's a different baby and a different analysis. What's it doing? It is more like a spinning top. It's not quite as big a green candle as we saw with the total market, but again, that movement's still below our weekly trend line. For those of you using your daily market worksheet, go ahead and mark your weekly trend line on the S&P 500 SPY as also going down. We had 3 weeks of down movement. The past week ended with an up candle, but again, a spinning top. We continue to see the PPO separate itself from the signal line, meaning that we're continuing to see downward pressure, and the derivative oscillator heated up and actually became longer, more down movement, more downward pressure. The S&P 500 is also in a confirmed down move. Now, let's down mood also, you could say. Let's look at the daily chart. It looks similar to what we saw at the total market up on Monday. Some indecision, spinning top on Tuesday. Not the doji we saw in the total market. Then down Wednesday, up a little on Thursday, and big down on Friday. Would have been twice the movement down, except, of course, the bulls were able to pull up what the bears pushed down. Crossed over going down on Friday also, just like the total market. And the derivative oscillator flipped over to the negative on the daily chart. So we have our 2-day chart and our weekly chart are both in confirmed down moves. Now back to the weekly. Let's check out what's going on with the Qs. If you remember, the Qs rotated over right at the end of the week last week, going down. Now this is what's curious, and let's see how this plays out for us. We have an up week on the Qs as far as the candlestick shows us for the week ending the 28th. It is an open box green candle with a long wick on top, about maybe a third longer on top than it is on the bottom. However, we have a confirmed down move on the weekly chart, even though some of the price movement was up. We've taken away our 2-day trend line because we just could not draw one. But what's fascinating is the market, after rotating over, going down on the week ending on the weekly chart, the 21st, the week ending the 21st of October, we have seen the PPO widen, actually move further away from the signal line, again portending further down moves, and the derivative oscillator has heated up. What does that mean? Even though we've got an up candle, the market sentiment, the price movement is actually down. It's actually the indicators are telling us down. Pay attention to down moves. That's where the market is heading, although it's not fully headed that way yet. Let's see how accurate that is for us in the coming future. What do we see happening throughout the course of the week? Well, so much of that upward movement happened on Monday and Tuesday in the Qs, which again, the NASDAQ 100, the technology stocks. Then after Tuesday, Wednesday, Thursday, and particularly Friday, the market really chugged down. Now again, that's what we need to pay attention to, is where the market sentiment is going. That's how we make our bread and butter when we're doing our virtual trades in order to see them work. So we have the daily chart actually rotating over there at the end of the day on Thursday. We'd actually call that Friday, rotating over on the PPO and the signal line. The derivative oscillator on the daily chart is not yet crossed over, but again, confirmed down move on the daily chart and the 2-day chart and the weekly chart. Go ahead and mark the weekly and the 2-day on your daily market worksheet. Now, lastly, I'm going to go back to our weekly, and we're going to take a look at gold. What is gold doing? Gold is still in a confirmed down move on the weekly chart, crossed over way back on the 19th of August going down on gold, but up movement over the last 2 weeks has actually broken through the weekly trend line, not been able to draw a 2-day trend line at this point. The derivative oscillators lost some of its downward momentum, and it looks like the PPO was not moving down at the rate it was the prior week. So again, some up movement or some at least bottoming out in gold. If we look at the daily chart, what do we see with gold? We see on the daily chart, gold crossed over going up on the 19th and really slid sideways for quite a while, then had an up day on Friday. That is where we are and again, mark your daily market worksheets. Gold's in a confirmed down move still on the weekly chart. That's the information you need for those of you who are following us with that daily market worksheet for the coming week. Now again, remember with gold, if you're into gold, please make sure that you listen to our daily podcast we're going to record after this one. Why? Because we particularly talk about the chart we use for trading in gold, which is our 4-hour chart. It is prescient, it is amazing, and it seems to work most every time until it doesn't work. It stopped working at the end of the year last year, then started working again about February, and has been wonderful since that time. So now let's talk about the one thing that we do only once a week, and that is the news. What moved the market over the last week and what might be moving the market over the coming week. Because remember, we say over and over again, you need to pay attention to the charts, not the media noise. Typically, by the time you hear something in the media, that move has already taken place. That old adage of the market, buy on the rumor, sell on the news, means that the players have already taken advantage of what's going to happen, and the suckers come in late. They're always selling low and buying high. So let's not be a sucker. Let's use the charts to give us the information. Now let's talk about the one thing we do once a week is the weekend review. What do we have going on? Well, we see that expectations for a December rate hike continue to solidify by the U.S. Federal Reserve. We're anticipating tapering of the monetary conditions that have been super favorable to the banks and the market. It seems like everything has been driven by free money. I guess if you were given free money, you could expect everything to go well if you were in the money business. When someone gives you money for historically low interest rates, makes it sort of easy to borrow and to knock up prices. The volatility index has hit a 14-week high over the last week, and oil prices declined. Also, the yield on 10-year U.S. Treasury notes rose from 1.75% to 1.85%. Now, as we see firmer economic data coming in from Europe and from the UK, we've seen the push on global bond yields to move higher and higher, and the much anticipated malaise that everybody thought would take over the UK following the Brexit vote has not actually come to pass. German 10-year bonds are solidly in positive territory, and we see that the UK's 10-year gilts are at a post-Brexit high. So again, Europe seems to be doing okay right now. The U.S., well, we actually reported the best quarter of economic growth in the last 2 years in the third quarter. And the economy expanded at almost a 3% rate. And of course, that was boosted by a rise in inventories. And we've also seen a narrower trade deficit. We've also seen consumption being muted somewhat in the third quarter. Now, as we continue to watch things happen, I tell you one thing that I find fascinating. I was recently in Spain for a couple of weeks, and that country has enjoyed for the last 10 months no government. They think Spain might be getting its government back together here in the next few weeks as different parties have tried to put together a deal. What's so fascinating about Spain not having a government is that the news hasn't been all that bad. In fact, tourism surged and the economy's grown at 3% annually over the past year. Is that not fascinating? Well, just something to pay attention to. Maybe we don't need all the government we think we need. And as we continue to watch things happen, let's talk about what might be affecting news over the course of this next week. Now, we're going to see in the UK and in Europe, they're going to, of course, come off daylight savings time on Sunday. And as we get into Monday, a couple of things happening. Core PCE price index, that is the Fed's favorite measure of inflation. That's going to be released on Monday. Also on Monday, the Eurozone CPI numbers and GDP are going to be released on Monday. Again, you start finding super favorable things being released. You could see the market soar. If super bad stuff is released, you're going to see the market potentially decline. Don't forget, the market is currently in a down move on the weekly and our 2-day charts, as we just discussed. All three of our indexes are in down moves. So pay attention to that on Monday. If you have particularly good or bad news, that can affect things. Now, Tuesday, a couple of things are going to be happening. Manufacturer PMIs are going to be released globally. Purchasing Manager Indexes, those are going to be released along with the Bank of Japan setting its interest rates. And again, anything's particularly good or bad, you're going to see that kind of stuff potentially affect things. And in fact, those PMI releases are going to be not just on Tuesday, but on Wednesday also. And on Wednesday, you're going to see the Fed's rate setting committee is going to meet. So look for potential news there. And again, anything super shocking, super good, super bad can affect things, but I don't really expect a whole lot coming out of that. But again, pay attention. You can have some market moving news potentially on Monday and on Wednesday. Now on Thursday, the Bank of England is going to meet. They're going to set their interest rates. And then on Friday, look for U.S. employment reports to be put out. We'll see if that report actually has good or bad news. Again, particularly good or particularly bad, they can affect the market some. Pay attention for those things, particularly though the two big days, Monday and potentially Wednesday. Folks, that is it for our weekly review and forecast. I hope those of you who are using your daily market worksheets have already put down where the market sentiment is on that weekly chart. As soon as we finish this podcast, we're going right to our daily review for Monday. So hopefully you'll tune into that too. If you don't already receive our podcasts on a daily basis, all you got to do is go to chartingwealth.com, sign up. We'll send you those daily along with the weekly review and forecast. You'll also get our How to Read a Stock Chart video link. You'll get our new layout using the PPO. You'll get a link to that, and you'll get a link to our daily market worksheet. How can you beat it? It's everything you need to be able to get started in learning to read these stock charts. We so appreciate you being with us. You have questions, problems, concerns, go to Charting Wealth. Let us hear from you. If you want to help us out, we ask you to do two things. Go to iTunes, subscribe to our podcast, give us a 5-star rating. You can also go to YouTube and subscribe to our channel. That will help us also. And tell us what you need. We're here for you. We want to see you become market masters. I tell you, all you have to do is spend 10 minutes a day with us. Fill out that daily market worksheet if you want to accelerate your learning. Listen to what we're doing, what we're talking about. Follow the markets with us. It only takes 10 minutes, and it will pay dividends you cannot believe. Before you know it, you'll be able to read those stock charts. And reading stock charts is like being able to tell the future, being able to figure out which way the market is going. Imagine, that's like having the Wall Street Journal a day before it comes out. Imagine if you could do that. What could you do regarding your finances? Well, we want you to practice. Open up an account at any of the online brokers. Fund it with $1 million of play money. They'll actually give you virtual money, and you can virtually trade and practice with us. Once you get good and you figure out how this works and how to read these stock charts, then and only then, when you develop your own trading technique from the things we teach and you pick up other places, then and only then can you start making your own trades. We're not a stock calling service. We're not here to give you market advice on how to spend your money buying and selling stocks and ETFs and the like, but we're here to train you to get you fascinated by the market and let you know that you can do this. Is it easy? No. Does it take time? Yes. Where will fortune yield its knowledge? It will yield its knowledge to those who stick with it. Perseverance is the most important of all human traits. And to those who persevere, much will be given. Thank you so much, my friends. God bless. Let us hear from you from chartingwealth.com.